Good evening and welcome to Arizona Horizon. I'm Ted Simons. President-elect Donald Trump says he will impose 25% tariffs on all imports from Mexico and Canada, along with 10% higher tariffs on goods from China. The threats are sparking fears of inflation and trade wars, all of which would affect Arizona. Joining us now is economist Jim Rounds, president of Rounds Consulting Group. Jim, always a pleasure. Good to have you here. Let's get right to it. 25% tariffs on goods from Mexico, on goods from Canada. What's going to happen here if this goes through?
Sure. You have to explain how it works. So a tariff, a lot of people think it's a tax on the other country. A tariff is a tax on the importing company. So we're going to see those costs, extra costs, passed on to the consumer. That's why they say that the local residents are going to be paying for the extra costs. Now, a small percentage will be passed on to the importing company, and then a small percentage will be passed on to the country of origin that we're trying to penalize, so to speak. But it's really a tax on our people, the residents of the U.S., and it's a tax on typically lower income individuals and small businesses as well. So it doesn't seem to match that overall goal of let's expand economic activity. And this isn't complicated stuff. This is like undergrad level economics.
I was going to say it would seem to be, and yet the president-elect says this is a way to slow the movement of drugs and to slow the movement of people into the United States. I mean, will Mexico see these threats and say, we better do something about the illegal immigration? Will Canada do something about this and say, we better do something about whatever it is they're supposed to do something about?
Yeah, well, Mexico, I think the discussion was the response would be, well, they're going to impose a tariff. Mm-hmm. But they would be imposing tariffs on their residents. And so the cost would be passed along to them. So it's really a battle of people hitting themselves on the head with a stick rather than hitting the other person, which is very unusual. But the way you do this is you work on economic development. You know, we have a lot of border crossing issues in Arizona, between Arizona and Sonora. The best way to deal with that is to expand economic development on either side of the border. And that's what I wanted to see happen over the remainder of the decade. And now I feel like we're taking a step back.
Whatever happened to that idea of improving Mexico's economy and improving opportunity there so that folks don't necessarily always migrate here?
And we don't have to just focus on improving Mexico's economy. It's mutually beneficial. There's a lot of capital improvements that we can make at the ports of entry. There's the potential of a deep water port in Mexico that will be advantageous to Arizona down the road. There's a lot of economic development in the border communities, both sides of the border. And then as the products come into Arizona, we'll have lower cost inputs from a neighbor that's a friend rather than from overseas, so it's more reliable. And then we'll be able to expand our high-tech businesses further. There's so many opportunities that aren't being taken advantage of, which is a little disappointing.
Okay, so the president-elect says first day in office, he's going to go ahead and impose these tariffs. Let's hold him at his word. Let's say he does that. In Arizona, we'll start with Arizona, mm-hmm. Which sectors get hit the hardest?
So what do we import from Mexico? There's a lot of food products. We have a lot of electronic parts, wiring, car parts. Now, those are going to come here. The food is just going to be more expensive, but the other inputs to other things are going to cause other prices to go up from the domestic companies. So the local companies are going to have to raise their prices too. One of the concerns, though, is that, picture being in a fight and it's a heavyweight. They can take a couple of, hard punches and they're still okay. That's the big company. The lightweights are the individual states. And the smaller businesses, you can't really take a punch if you're a small business on these tariff issues. You might go out of business. So I think we're going to see lower income people and the small businesses hurt. Rural Arizona could be disproportionately impacted in some cases. But so that's on the Mexico side. On the Canada side, people make jokes, well, maple syrup cost is going to go up. No, we get oil, we get plastics, we get lumber. We have an affordability issue related to housing across the country. Do we really want to raise the price of plastics and lumber? No. And so there's so many things that are contradictory to basic economics. It's very frustrating because I really thought in the president-elect's second term, he was going to go from the bull in the china shop to the grandpa that walks around the block with you and you chat about the economy and then you clarify when he's doing something wrong and he says, that's a good point. It doesn't seem like we're going to start out that way.
And yet Trump supporters say that don't be jumping off cliffs right here. This is a negotiating ploy. This is being used as leverage against these countries, again, to keep drugs out, to keep illegal immigration out, and to keep China from dumping and these sorts of things. Do they have a point?
Well, it goes back to that, that stick example again. If I was saying, I want to convince you to do something, Ted, and then I hit myself on the head 3 times with a stick, would that change your opinion? No. And so we're hurting ourselves, and we're not leveraging it properly. There's different things that we could have done. If we would have already been advancing our economic outreach with Mexico, we could have said, you know what, if you're not going to do something and help work on us with the drug issues, we're going to pull back a little bit. But taxing U.S. residents, essentially, which is what it is, it's poor man's sales tax. That's not the way to do it.
Let's get to China here, because Beijing is already making noises that it could respond with a currency war. What does that mean?
Well, so there's been discussions, and I think you've already seen some changes in Canadian currency and Mexico currency compared to the U.S. People don't know exactly how that's going to play out, because it's going to be different by industry and by the country that we're talking about. And so there's still a lot of unknowns, but what's very clear is when you have the president-elect saying, day one, I'm going to impose a 25% tariff, and you know that that's going to get passed along to local consumers, that means inflation's going to go up. And what's so disappointing is we waited so long for the rate of inflation to stabilize. It hasn't gone down, it hasn't gone negative, so our prices are still high. When somebody goes to the grocery store to buy food, they don't say, I wonder what percentage this is. They say, how much does this cost in terms of dollars and cents? They're still paying high prices. Well, the growth slowed down, and we're at a point where we were going to maybe see things fall a little bit. Now we're going to see additional inflation at a time where I don't think it's going to be helpful to the consumer. I think it's going to hurt them, because we're at the tail end of a business cycle.
Is it going to hurt for a short period of time, but getting manufacturing back here, getting American businesses up and operational, or at least in a better position than they are with international trade, et cetera, et cetera? In other words, propping up America as opposed to bringing stuff in from other countries, which is a part of the Trump doctrine. Is there going to be pain at first and then that sets in later? Is that a possibility?
I guess there's always a possibility, but the challenge is, what we want to do is we want to add higher value-added manufacturing R&D in the U.S., which means higher levels of educational attainment. We want people to be more productive. Simply bringing back some low-wage jobs on low value-added manufacturing isn't really helping our economy, but it's going to be hurting in terms of who pays the tariffs. It's going to be a pretty significant tax for the people across the U.S. I would much rather see maybe 1/100th of that amount that's going to be essentially lost because of the tariffs be used on heightening people's ability to move up the career ladder, and then they'll be paying more in taxes, and that'll take care of the national debt, because the national debt is the main issue that he's been bringing up. I'm going to bring down the national debt because it's gone up $10 trillion over the last 4 years, and we want to bring it back down. But they're taxing U.S. citizens to bring that down, and it's also making economic inefficiency happen at a pretty significant level. Tax revenues aren't really going to jump as a result. Across the board, there really is no positive economic answer. Now, politics is part of it, public policy discussions is part, economics is part. The economics is math. You can rely 2 + 2 = 4. When you bring in politics and policy, you're negotiating 2 + 2, does it equal 4.5? I don't know, let's have a committee and figure it out. And so things get a little less efficient. Right now, politics is driving economic policy right now. And what's shocking to me is, why is it that some of the local economists as far away from DC and Arizona are finding this trivial high school and intro economic problems, and how do you solve it? And the advisors in DC have no clue. It's because I don't think they're being listened to. And the best indication of a good leader is if they surround themselves with good people and they listen to them. And I'm still going to be positive. I still would like Trump to succeed, but this is a bad start from an economist perspective.
Interesting perspective from you, Jim Rounds. Jim Rounds, again, president from Rounds Consulting, talking about tariffs. Oh boy. Thanks for joining us.
Always good to see you.